Happy Friday, Brian Manning here. Let's get right to it. So Monday this week, pretty quiet news day, not really much to talk about there. Tuesday this week was the start of the Fed's two-day meeting, so we'll talk about that here in a moment. Also, Tuesday this week, we get FHFA reports on appreciation. So the FHFA measures homes across the nation that have conventional mortgages attached to them. And on a year-over-year basis, those homes appreciate at a rate of 6.4%. So really good to see there. Wednesday this week, we got new home sales. New home sales measures signed contracts for new construction transactions. Those are up 3.5% on a year-over-year basis. So really good to see strong growth there. Also got the Federal Reserve. So we got a Fed rate hike, which everyone expected. Not a big deal. Also, what was really the market mover was the removal of the word accommodative out of their speech and really moving more into a neutral position. Probably very likely that we will see a rate hike here in December. What's interesting though is the impact that we're going to see next year. So right now the Federal Reserve meets on average, I think it's 8 times per year, but they only do a press release out of 4 of the 8 meetings on an annual basis. And typically if the Federal Reserve is going to raise or lower rates, it's only going to be when they have a press release. Well, next year is going to change, and after every single meeting, all 8 of them next year, they're going to have a press release and Jerome Powell will speak every single time. It's going to add a little more volatility in the markets because now there's potentially a chance for a rate hike or comments on inflation or whatever it could be, anything that could be market moving from the Federal Reserve 8 times a year. So that's going to be something for us to watch out for next year. Also, we got pending home sales. Pending home sales were down 2.3%. This is in the face of mortgage rates being higher, lack of inventory. I know that it's a slight miss from what was expected. I think it was expected for pending home sales to be flat nationwide, so we had a little bit of a miss there. And then today, which was an inflationary report we're looking for, is the PCE. PCE is the personal consumption expenditure. You've heard me talk about this. There's a couple of different reports for inflation that we look at. One of them is the CPI, that's the Consumer Price Index. That's what we think is more accurate. The reason why is because PCE does not include out-of-pocket costs for living expenses or medical expenses. But the Federal Reserve thinks PCE is the number to look at. So on a year-over-year basis, the core rate for PCE, which strips out volatile food and energy, remained flat at 2%. So you're seeing a little bit of benefit in mortgage rates today because the inflation report was pretty kind to us. Unbelievable. Next week is already the first week of October, which means it's jobs week. It's going to heat up next week because every time we have a jobs report, it always heats up. So we have to keep an eye on what's happening with the markets there as well. Hope you have a great day. Happy Friday. And if you need anything, reach out to us anytime.